Welcome, boys and girls, to our Day 2 lesson in accounting. We are continuing with the cash flow statement, and today we are looking at note number 3, which is dividends paid, and note number 4, which is taxation paid. I've projected the information there that I want us to look at. We have an extract from the income statement. And what we want from this one is this amount for taxation. But for now, we are going to keep it like that and move on to the next part where we are looking at notes to the financial statement. We have our retained income. And as you all know that our retained income will show us the dividends for the year. We have our interim, which is the paid, and our shareholders for dividends, which is the recommended at the end of the accounting period. So in our case here, we have 48,000 and 72,000, which means that the dividends for the year were 120,000. But remember, this was not paid, this 120,000. Only the 48,000 was paid. And here we are supposed to calculate dividends paid. Now, when you look at additional information here, we have opening balances, shareholders for dividends. For the year 2018, when we started the year in 2019, we had 40,000 as shareholders for dividends that were recommended during the previous year but were not paid. And these are paid in the following accounting period. And then we have 2019, our 72,000, which is the recommended for this year. So when calculating the dividends paid, you can use two methods. I want to start with the shareholders for dividends account. I want to start with the shareholders for dividends account. So we are going to have it here. Shareholders for dividends. It's a liability. The balance is going to be on the credit side. So our year ends on the 28th of February, so that should have been on the 1st of March 2018. So it's 2018 March 1. Balance BD. Balance BD, how much was it? Shareholders for dividends, 40,000. So I have my 40,000 there. And then we proceed to fill in everything else that we have. We are told that shareholders for dividends at the end of the year was 72,000. So this 72,000 is going to appear here on the 29th of February at the end of the accounting period. February 29 as our balance carried down. How much is it? It is 72,000. It is 72,000. So I'll have my 72,000 there. And then there's something missing here. There's something missing here on the 2019 February 29, and then here 2018 March. We are going to assume that maybe they were paid right at the beginning of the accounting period. 2018 March 1, it was paid right at the beginning of the accounting period. Now, when you look at our dividends according to the note, it is 120,000. So you come here, you indicate with our dividends there, of 120,000. You do that. Remember, both sides should add up to 120,000. So when we do that, 120,000 plus 40, it will give us 160,000. So our totals on both sides should amount to 160,000. Then 160 minus 72. 160 minus 72, we get 88,000. 88,000. What is this 88,000? This is what was paid. This is what was paid. This is what we were looking for. So this is the amount that goes to our cash flow statement as dividends paid. Now, to prove this, boys and girls, just to see if you did the right thing, remember when we are looking at dividends paid, we are looking at the opening balance in the shareholders' dividends. What was declared the previous year? And what we paid during the year is interim. So it's going to be our opening balance of 40,000 plus the interim of 48,000. Can you see it gives us 88,000? Which means that here we have done the correct thing. This 88,000 is correct. You are simply adding your opening balance from the previous year, which we are going to pay at the beginning of the accounting period, to the interim dividend, which was declared during the year and paid. So we have our 88,000 there. Then another way of presenting this, will be, that is our note number 3 now. This is our note number 3. You are going to have amount in the financial statements. What is our amount in the financial statements? The amount in the financial statements for dividends is 120,000. So we are going to have our 120,000. Remember, this amount in the financial statements should always be a negative. Therefore, it should be in brackets. So I'm going to put it in brackets. Then we go on, we look at dividends at the beginning of the year. Those dividends that were declared the previous year and never paid, they are going to be paid during this accounting period. So if they are going to be paid during this accounting period, it is going to be an outflow. So we are saying balance at beginning. Balance at beginning of how much? The 40,000. We have our 40,000 there, and again it should be a negative because this amount is going to be paid. And then the last thing is balance at end. At the end of the accounting period, what is our balance at the end of the accounting period? It is 72,000. This 72,000 was never paid. We just declared it was just recommended. It was never paid. So it will be a positive. It will be a positive. This one will be a negative, and it should appear in brackets. And then 120,000 and minus 120,000 plus minus 40,000, you will get minus 160,000 plus 72,000, you will get a negative 88,000. What is this negative 88,000? It is dividends paid. It is dividends paid. So this is what we paid when it comes to dividends. This is what we paid when it comes to dividends. Now, let's look at how this is going to appear. Let me just project our answer properly there on the board here. So we are saying note number 3, dividends paid. Amount in the financial statements, it is always a negative, so it should be bracketed. Take note that if you write 120, you don't put it in brackets, you will lose a mark. Balance on last day of the previous year, which is the balance at the beginning of the accounting period. Remember, if it's balance at the end of the accounting period, the previous accounting period, this year it becomes balance at the beginning, like I showed there on my note, 40,000. It is an outflow, so you should always show this amount in brackets. Then the balance on the last day of this current year, the balance on the last day of this current year, the dividends that we have declared but have not paid, money has not gone out. So it is going to be a positive. It is going to be a positive, and like I said, 120,000 plus 40,000, both being negative, will give us a negative 160,000 plus 72,000, you get your 88,000, which is an outflow. Dividends paid, or you use the ledger account shareholders for dividends, and then you are able again using that to calculate the dividends paid. Now I want us to see how that is going to appear on the face of the cash flow statement. How is this going to appear on the face of the cash flow statement? Here it is. Just look at note number 3 only. Dividends paid, 88,000. And it is a negative. That is how it appears on the face of the cash flow statement. Then we proceed to note number 4. Taxation paid. Note number 4, taxation paid. Note number 4, taxation paid. All right. We have our tax there. Our tax of 122,000. This is the tax for the year. It does not mean that we paid this tax. This is just our tax liability that has been calculated based on the profits that have been made during this accounting period. So for the cash flow statement, we need now to determine how much exactly was paid. So I'm going to draw up the note for you here. All right. Note number 4. We are going to start as usual with the amount in the financial statements. What is the amount in the financial statements? 122,000. So we put our 122,000. You always put that in brackets. Make sure you put that in brackets. Then we start with the balance. We move on to the balance at beginning. Balance at beginning, and then we are going to have our balance at end. This is at the beginning of the accounting period, which was your closing balance at the end of the previous year. This is the balance at the end of this current year. Now, this one is a naughty one. As you all know, that SARS income tax account is one account which can have either a debit balance or a credit balance. So I will explain to you here. Maybe before I put amounts, let me start by showing you what happens when we have different balances. What happens when we have different balances? Let me just use X's now. Remember, we said this one will always be a negative. Now, I want to start with the balance at the beginning. This time, I want to assume that the balance is appearing as a liability. For instance, here, income tax, trade, and other payables. It is appearing as a liability. It means that we owed SARS. So if the balance at the beginning falls under trade and other payables, it means it is going to appear, if balance appears under trade and other payables, it is going to appear as a negative. Why as a negative? Because we are going to pay this at the beginning of the accounting period. So money will go out. And then if the balance at end, let's assume again it's appearing under trade and other payables. It means we owe SARS. We did not pay that amount. It is going to appear as a positive. Why? Because that amount did not go out. Now, let's move on to the second scenario. I want to show you a second scenario, note number 4. Like I said, balances can either be a liability or a current asset. We are going to have again our amount in the financial statements, which will always be a negative. Now, in our second scenario, amount appears in trade and other receivables. Amount appears the opening balance under balance at beginning, appears under trade and other receivables. Now, if it appears under trade and receivables, it means we are not going to pay that amount to SARS. Instead, we are going to receive that amount from SARS. So it is going to appear as a positive here. It will appear as a positive. And then we go to the balance at end. Balance at end. Again, I want to assume that it is appearing under trade and other receivables. If it appears under trade and other receivables, it means that we paid SARS more than what we should have paid. So the balance at end is what we paid SARS over and above what we should have paid for tax for that accounting period. So that amount now is going to appear as a negative. All right, I'll explain that once again. Amount in the financial statement is always a negative. Balance at the beginning. If it appears under trade and other payables, that amount should appear in brackets because we are going to pay SARS that amount. We actually owe SARS. And then if the balance at end appears under trade and other payables, it means we owe SARS. If we owe SARS, it means that amount was not paid. So it should appear as a positive. Then the second scenario, amount in the financial statement as usual appears in brackets as a negative. Then balance at beginning. Sorry about that. Trade and other receivables. This time it appears under trade and other receivables. If it appears under trade and other receivables, it means SARS owes us. It is them that are actually supposed to pay us. So that amount is supposed to appear as a positive. no brackets if that balance is like that. If the balance at end appears under trade and other receivables, it means we paid SARS more than what we should have paid for that accounting period. So SARS owes us. So if we paid SARS, it is an outflow. It is going to appear in brackets. I think now we can proceed and do our note. Now we can put in the amounts. All right, amount in the financial statements. Amount in the financial statements, we say this how much? Okay, let me check it out here. It's 122,000. 122,000. Remember, it should always be in brackets. It should always be in brackets. Always in brackets. And then balance at beginning. Balance at beginning. What was our balance at beginning? It is 12,400 and it appears under trade and other payables. It appears under trade and other payables. Trade and other payables. So if it appears under trade and other payables, it means we owe SARS. So it is going to be paid eventually. Then it should appear as a negative. How much is it? 12,400. 12,400. A negative there. And what is our balance at end? It is 10,800. Again, it appears under trade and other payables. It means we did not pay SARS this much. So it is going to be a positive, and it is 10,800. We do that. This is our taxation paid. Taxation paid. All right, let me use my calculator there. All right, it's going to give me 122,000 plus 12,400 minus 10,800. So I'm going to get my tax paid of 123,600. 123,600. That much. So that's my taxation paid, which will go to my cash flow statement. I can also use the SARS income tax account. I can also use the SARS income tax account, the ledger account. SARS income tax account. We have a negative, a credit balance. So we're going to say balance BD there at the beginning of the accounting period, 12,400. And then we're going to have the closing balance, which is also a liability balance. Oh, I'm going to have my bank here. Then we're going to have balance carried down of how much? 10,800. And then I'm going to have my income tax here of 122,000. Now, 122,000 plus 12,400 will give me 134,400 minus 10,800. Let me cross check that. 134,400 minus 10,800 should give me 123,600. Good. 123,600. This is my bank. This is what we paid. Then we now proceed to show that on the face of our cash flow statement. That is our note number 4, taxation paid. Note number 4, a negative 123,600. Okay, let me just do a quick recap. Remember, your dividends paid, your taxation paid, they should both appear as negative. They should both appear as negative on the face of your cash flow statement. Boys and girls, thank you very much. In our next lesson, we are going to look at note number 2. We are going to look at note number 2 and the whole of the cash flow statement. What is remaining on the cash flow statement? So what I want you to do in preparation for our next lesson, please try to learn the format of the cash flow statement. Know the different components of the cash flow statement. Cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. Good day.